Hello, thank you for coming. So my name is Ngoc Nguyen. I'm the Vietnamese correspondent for dealstreetasia. So I am happy to moderate the panel today because it's basically what I do on a daily basis to interview the investors. Please give our audience a view of what you're doing in Vietnam, about your fund and what you're doing in Vietnam. So in general view.
Okay. Hi everyone, I'm Shuyin Tang. I'm an investment principal at Patamar Capital. For the past 17 years, we've been investing in South Asia and Southeast Asia. We've deployed about $200 million into a wide number of companies across the region. Focus is on investing into companies which unlock better economic opportunities for low-income populations, while at the same time making top quartile financial returns. So I've been in Vietnam for around 5 years now. We've invested in 3 companies here. One of them is Topica EdTech Group, the largest online education company in Vietnam. The second is iCare Benefits, which is an employee benefits program for frontline factory workers. And the third is Trust Circle, a fintech startup based out of Ho Chi Minh City. So that's what we're doing. I mean, we're very committed to Vietnam. Out of Southeast Asia, it's kind of one of our top 3 priority countries, and we hope to really deploy a lot more capital here over the next several years.
Question?
Hello everyone, my name is Koichi Saito from KK Fund. We are based in Singapore, and yeah, we are looking at seed stage investment in Southeast Asia. We are running 2 funds, and so our first fund pretty much focusing on the online marketplaces. And then second fund, we are looking for fintech, retail tech, logistics, and yeah, media and entertainment. So more, broad and target we have. And yeah, that's pretty much all for my fund. Yeah.
Hi, I'm Victor from Gobi Partners. We are an early stage VC fund that invests from seed to A and to Series B as well. So far, we have done 2 investments in Vietnam. One of it is in Ho Chi Minh, TripMe, travel company, and the other one is OnPay from Hanoi, which is an sector in the F&B sector, and also basically anything about women. So because we think that the women community actually has a lot of potential, and that's where we want to focus on as well. I'm based out of Malaysia, but I do come to Vietnam almost every other month. And so, yeah, looking forward to meet more entrepreneurs and investors who are interested to support entrepreneurship over here in Vietnam as well.
I think there has been a lot of discussion about women power today in this event, and this is a very balanced panel. We have 2 men and 2 women, right? So I think there is a lot to talk about investment in the early stage. So with no further ado, I shoot the first question. So what do you look for in the early stage? So why the early stage? Why do you mandate yourself to invest in young startups? Gobi, yes, Victor, can you go first?
I think the decision to invest in early stage, partly it's because of the ecosystem in different countries. For example, I mean, since we're in Da Nang, just talking about Vietnam. Vietnam is an emerging market where entrepreneurship, or at least from our point of view, because we look at technology entrepreneurship has just begun. So there's still a lot of upside for a lot of investors, for entrepreneurs to explore. Whereas if you look at the countries like Singapore or Malaysia, which is slightly more advanced in the sense of historic number of years that they took to get to where they are, then you will look at slightly more mature companies in those countries. So for me, Vietnam is an early stage country where you get to see a lot of entrepreneurs who are still passionate about the ideas that they have, and it's less so about the numbers, but it's more about the whole big picture, how they're going to change the world, and that's why we make the conscious decision to invest into early stage.
So for us, yeah, mainly two reasons to invest in the early stage. So one, yeah, we still invest in the founders, the management team. So yeah, once we find a good team, why not? I mean, no reason to wait for up to Series A. The other reason is more practical, actually, regarding a return. So there's not much IPO opportunities here in Southeast Asia. So we have to depend on the M&A, merger and acquisition. So in that case, there are not many company who is willing to pay more than 30 million US dollar to acquire startups here. So we have a base case scenario, I mean, as for the investment. So base case, my company get exit at 20 to 30 million US dollar. So in order to get 5x, 10x return, we have to come earlier, invest in earlier stage. So of course there is Alibaba, Tencent, SoftBank who can pay 1 billion US dollar, but still not many player who is willing to pay more than $30 million. So that's why currently we focus on the seed stage to get a higher return. Yeah.
Shuyin, I want to add a sub-question to that question because you are with an impact investment fund. So how does early stage investment matter to the social enterprises?
I mean, well, I think first to answer your more general question, yep, so I would agree. It's definitely a function of the maturity of the market as well as kind of the exit potential that we see. I think the question that we ask, though, for Vietnam is, I mean, are we going early enough, right? Because if you look across the region, I mean, I think it's easier to do kind of $1 to $2 million deals in, say, Indonesia and the Philippines, et cetera. Even at the $1 to $2 million kind of Series A mark, I would say there's not a ton of companies out there. I mean, I think both of Koichi and Victor have also spent a lot of time in this market. There's probably just a handful of really investable kind of Series A companies out there. So I think one of the questions that we ask is, even though our typical ticket size is around $1 to $2 million, in Vietnam, should we be going even earlier, right, to take advantage of some of the opportunities here? To your question around kind of the impact, so I would firstly clarify that we don't just invest in like social enterprises per se, because I think we find that quite, not a very kind of deep term, right? I mean, anyone can like call themselves a social enterprise. We're more interested in looking into the business and understanding what is the value they are creating for low-income populations. But I think, for those companies which are looking at low-income populations, which I think are trying to solve some really kind of pervasive problems, I think there's very few investors who are looking at that particular group of that particular customer segment. And I think for them, it's particularly hard to access capital. So I think in that sense, we see that we provide a unique kind of type of financing and support for them to grow their businesses.
Okay, so in terms of, we are talking about the ticket size. So for your fund, which ticket size, so what is the range that makes sense?
Yes, I think for us, I think the minimum we can go is really about 500,000. 1 to 2 million is our sweet spot for the first investment, and we're reserving about a third of our fund to do follow-on investments because I think we do see that the Series B kind of options are quite limited in Southeast Asia. So I think we want to make sure that we have the cash to support our companies through the good times and the bad.
Koichi?
Yeah, our typical ticket size, 300K to 500K, which supports 12 months or 18 months operation until next round.
Victor?
For seed stage, typically we do between 250K to 500K. But of course, it's a function of how mature the company is. Even at seed stage, you have different companies at different level of capacity. Whereas for Series A, typically $1 to $3 million. And then B would be anything beyond that.
So there are also a lot of debates on what types of investor that is there. Like here in Vietnam, some say that we do need more early stage investors, and some argue that we lack later stage investors. So what's your take? Yeah. Shuyin, do you want to go first?
Sure. I think where there's, clearly, or where there's a gap, that I see is really kind of at the angel and seed stage, right? Because, that's where the critical mass of companies is in Vietnam at this time. I don't think there's so many companies trying to raise Series B and can't, right? I think if there was an interesting opportunity in Vietnam at the Series B level, a regional fund would come in, right, if it was good. What you do see, though, is a lot of people trying to raise like 100, 200, 300K. And, because the angel kind of community is still kind of very, very nascent and somewhat uncoordinated, I guess is the word. It's hard for those kind of founders to connect to appropriate sources of capital, even if they have got an interesting idea and a strong team. So I think that's where we see the gap. For us, yes, maybe, one could say that we're we don't find a lot of investments, but I think for a regional fund like ours, we only need to make 1 or 2 investments in Vietnam every year to be kind of fulfilling our mandate.
So, Victor, you have made 2 investments. How about your top?
I think there are a lot of investors who are interested in the greater Mekong region. In this case, Vietnam, of course. However, the conversion from interested to actually invested, there's still a huge gap over there. Partly because the education level amongst investors is still quite limited. So not many investors are actually aware of how businesses are done in Vietnam itself. Obviously, I think the first question that amongst investors we have to ask ourselves is, whenever a company comes to us, are they really bad? Or are they investable? Or are they not investable but good businesses? So it goes back to the kind of investors who are really interested. If they are business angels, then it makes sense for them to get more active. But to get through the hurdle of, putting cash into a stranger's company, that's the part where I think Vietnam would have to, work on.
So what are the challenges that keep you from making more investments so far?
I think similar to Shuyin, we are a regional fund. We don't have to invest all our cash into Vietnam. Most of the time, our investments is really depending on the strategy that we have. And also, of course, my key focus is on how do we build a portfolio of companies where all these companies can support each other. For example, I have a lot of B2C companies that are in travel, in F&B. So the next thing I will look for is a B2B opportunity within travel, within F&B, so that I can build the whole value chain from B2B to B2C. Kind of create a portfolio of companies where you can support each other. Because otherwise, if you give $500,000 to one company, it's just $500,000. But if you give $500,000 to 2 companies who can work together, it's way more than $500,000.
And now, Koichi, what keep you from not making any deals yet?
Okay, I think one of the obstacle, a bit hesitation, right, is lack of the capital in the later stage. So at the seed stage investor, right, let's say in Thailand, Singapore, Indonesia, they have a lot of access to Series A and Series B investor. So as a seed stage investor, our short-term goal is bringing my startup to the next level, which is Series A and Series B, right? And then in Vietnam, there are few capital in Series A and B. So let's say my investee is in Vietnam, right? If the Gobi doesn't like it, who else should I talk to? So it's a lack of the capital. So this is one issue. So the other one is regulation, especially in the fintech and media advertisement. Yeah, so many regulations. So startup might be, shut down by government. There is one risk too. So, but still, I see a lot of. I highly value the talent in Vietnam. Vietnamese, as Bobby before said, right, a lot of engineers, the good engineers based in Vietnam. So So as for the talent, I don't see any problem. So I'm still willing to invest in the Vietnamese market.
So when do you expect to score the first deal?
Score?
To seal the first deal? The first investment here. So how did you picture in the short term or in the long term that you have the first investment in Vietnam?
Oh, definitely, yeah, definitely, yeah.
So soon, right?
I think so. Yeah, everyone. Bobby also keep pressuring me. So yeah.
So Bobby and Adrian are doing a really good job with the first. We had the panel earlier on this. So for startups that are coming out of those programs, what do you expect them to deliver when they pitch for the next round from VC investors?
Yeah. I mean, for me, I think it's selling an idea is exciting. Selling a vision is cool, but I think more so, entrepreneurs should focus on the nuts, the bolts, the details of the businesses that they are trying to do. Because at the end of the day, I would prefer to hunt for a startup that doesn't need VC money at all. I actually am not so keen on startups that are actually constantly chasing VCs around. Because if you are fundraising, you're giving up time for your business. So rather than you go out and constantly fundraising, I would actually like to see companies that are just focusing on the business, and VCs have to beg to get into the companies. So those to me are the hidden gems that you can't find because they're just not out there fundraising. They're at home or at the office running the business and making money.
Shuyin, what's your take on this?
Yeah, I think Victor makes a good point. I think there's a lot of kind of like buzz and hype recently in the Vietnam ecosystem. A lot of kind of pitching competitions and all of this. It's turning into a bit of a
bling blings.
Yes, and so it's turning into a bit of a circus. I think we're similarly looking for people who are really focused on execution. I mean, it's really a team who is kind of getting their hands dirty, focused on a couple of key metrics, and I think really, laser focused on improving their unit economics. And showing a good understanding of that. I think, also don't like startups where you have to kind of burn a lot of cash kind of over kind of 12 to 18 months to reach some place. I think we're looking for companies where there's a kind of very clear path to positive unit economics or profitability, I think, within the investment timeframe.
Okay, so let's just imagine that when in Vietnam there are a lot of startups that can bootstrap themselves and they do not want to share their shares to VC investors, then will that scenario happen in Vietnam, and then how is Vietnam positioned as the market for VC investors? As Victor said, that he looks for companies that does not really need VC money, right? That the team can focus on business and do themselves. So just imagine that scenario.
For me, it's like a bit of a tweak. I think we're looking for similar companies which are like in a comfortable cash flow position. It doesn't necessarily mean that they never need money to scale. I think at some point, if the company has a big vision and wants to scale, I think they do need additional funding, right? But I think they're negotiating then from a position of strength where they're kind of cash flow positive, keeping their burn rate low. But if they really want to reach kind of additional cities, reach 1 million customers, users, then of course I think most would see the need for VC funding, and I think that's where we can make a case.
Yeah, so they still need money for expansion, right?
Yeah, I think at the end of the day that's usually the case. It's hard to bootstrap forever.
So in terms of the verticals, like Gobi focus on the tourism industry. So you do a lot of investment in the F&B and travel. So what kind of expertise can you provide to the startup?
I think first and foremost, we provide our own ecosystem, because what we are actively doing is we are trying to but put all our companies side by side so they can actually learn about each other's markets as well as each other's business model. For example, we have an OTA in Indonesia. We also have a property management or Airbnb's comparable in Indonesia as well. So one focus on the tours and the other one focus on accommodations. So for them to cross-sell content, it's pretty straightforward because they're not eating into each other's space, and at the same time, they're actually providing travelers with more options, with more value add. So that's something that the first thing that we can provide. Obviously, I think it relates back to the question you asked just now. Why would a startup want a VC if the startup doesn't need money? We provide a regional perspective. For a lot of companies, it's good to focus on the local markets, but when it comes to expansion, they need someone who has the bird's eye view to be able to provide feedback or at least some insights on how to operate in other countries. To give you an example, like some of the Malaysian companies that we have, when they expanded to Thailand, they need to, like for example, get a local proxy to help them set up a subsidiary in Thailand. That's what we actively help them to do as well. Get them a local director to set up the company, to connect them with the right media partners, the right advertising agencies, the right kind of channels for them to distribute the products. So that's something that we actively do. So yeah, hopefully that answers you.
And Koichi, if you invest in a Vietnamese company and they on experience, so what kind of support can you give them?
So we have a lot of portfolio company in all over Southeast Asia. So of course, yeah, we can provide networks and tips about outside Vietnam. And then besides that, I think most of our investors actually for my fund is Japanese LP. So yeah, definitely we have a strong access to Japan. But I do not expect the Vietnamese company is going to Japan and having a business there. Rather than that, we are expecting, they are getting an exit. Vietnamese companies selling themselves to the Japanese company, right? So, Gobi's portfolio company, recently they got acquired by a Japanese company. So, for us to, we have a strong access to there. So, we are always trying to bring finance from Japan. In terms of Series A or Series B or even exit, so M&A opportunities. I think that is our unique position for my fund.
So this is a question for all three speakers. A lot of investors have said to me that they look for startups who can create value. So what kind of values do you seek in the portfolio companies?
Money value? So obviously we have the responsibility to generate return for our investors as well. If we don't, our investors will bank us. But more than just money, we do keep measurements like how many jobs we have created for our companies, how many markets they are in. So these are some of the key numbers we actually look at as well, because the growth of a company is also a function of how much talent they have. And because of that, we actually invested into some talent-related companies that will help the rest of the portfolio companies to look for new recruits, to look for new talent, to explore other areas of business where they need to hire, like for example, data scientists, social media guys, digital marketing guys. So that's something that we keep track, and we want them to create value by actually supporting the local economy. So GDP measurements, all those are quite important for us as well. So value, if you are doing the right things, you are creating value, not just money value, then that's something that we want to look at.
And Koichi?
I've seen only money value, so.
So do you have nothing to add to that?
From investor, right? For us,
yes.
To the. Okay. Besides money, right? It's money, all about money. So.
So Shuyin, that's yeah. So the value and also how to help companies that really intense impacts to generate profit.
Right. I think for us, I mean, you know, the big question in the impact space, right, is there a trade-off between creating kind of social impact value, as well as financial value? And I think for the kind of companies that we invest in, we believe the answer is no. The financial value and social impact value can go hand in hand. Because I think fundamentally, as I mentioned before, our investment thesis is around creating more economic value for low-income populations, right? And the impact is really baked into the business model. So for example, I mean, for our company, or one of our investments here, Eye Care Benefits, its very core model is really centered around providing access to affordable finance credit to low-income factory workers earning $150, $200 a month, right? So in that sense, I mean, financial value in terms of growing that base of factory workers, selling them more products, increasing the loan book, fundamentally drives more economic value because it makes it a more attractive target to potential acquirers. At the same time, as they scale, they're creating much more economic value for these low-income families, right? So I think for us, we see that the economic value and impact go hand in hand. And I think that's, I guess, the only reason why we believe that we can also achieve top quartile financial returns with our fund while still being true to the social impact vision of our firm.
So the three funds here represent the investors, but not all of them, because I see that there are an increasing interest from early-stage investors into Vietnam. So there are new VC funds and also serial entrepreneur. They launch their own investment vehicle. So what are the impacts that that have on the startup, both like good and bad impacts, given the flow of the capital?
I think healthy ecosystem needs like I think flow of the idea, flow of the talent, and also flow of the money. So definitely, it's more capital supports a lot of more healthy ecosystem. And yeah, I mean, nothing but, I mean, everybody say like if Chinese, a lot of Chinese money is coming, into Southeast Asia, this is bad or not, but yeah, I mean, for us, yeah, I mean, for both startup and BC, yeah, I mean, we are welcome to the new capital and a lot more capital, yeah.
Right. I mean, I think, especially for a place like Vietnam, I think more capital, particularly at the early stages, and later stages too, for that matter, I mean, is welcome, right? I don't think we're in one of these like very overhyped or bubble situations, like, say Indonesia, where it's extremely I mean, I think when I'm talking to my colleagues in Indonesia, in Jakarta, I mean, the amount of competition there for deals is intense. I mean, I think it's really driving up valuations. It's very frothy, market there. I think in Vietnam, Vietnam is still kind of much harder to access, and as a result, it's kind of made it still quite an attractively priced market, I would say, for opportunities.
I think more corporate support here must be needed. Right? For example, in Thailand, right, I see a lot of collaboration between startup and big corporate. So, for example, one company has been struggling a lot in fintech industry, but then once they get support from bank, they turn into the profitable, and they are preparing for the IPO right now in Thailand. So. Yeah, I see more corporate supports in Vietnam and like Thailand or Singapore.
My comment from a capital market standpoint is really that in an early stage ecosystem, I kind of break it down into two phases. Phase one, where is the money? So having more money in is fantastic. Encouraging more investors, more entrepreneurs, more businessmen to put the money in to the ecosystem is good. Phase two, are these friendly money? If you're getting angels or businessmen who are putting cash into a company, but they end up controlling the company or end up giving the kind of bad advice, the bad deal for entrepreneurs, it actually hurts the ecosystem. So having skill sets and knowledge to be properly transferred from the earlier entrepreneurs to the new entrepreneurs, that is going to be more important later on. But at this stage, I think I agree with what Shuyin mentioned just now. Having more capital, like Koichi mentioned as well, having more capital in is actually good for the ecosystem.
I think, I mean, building on Victor's point, I think it's gradually professionalizing, right? I think in terms of, is this money kind of smart money, helpful money? I think we see there's more kind of angel groups forming, and I think not the typical like, oh, we want 90% of your company, right? I think they're approaching it more like, say, angel investors in the US might approach it. Providing kind of networks, helpful support, and asking kind of for a reasonable stake in the company versus complete control, which I think was a problem in the past.
So as a VC investor, how much time did you spend to work with the portfolio companies?
Really depends.
Yeah.
One of my portfolio companies is WhatsApp me every day, but it's fine. At 4 a.m., WhatsApp me, what should I do? It's fine. But usually we do the weekly meeting on the Skype. We set up a strategy and supporting the fundraising. But I don't really touch the operation because they know better. They know the operation better than I. So mostly for the strategy and fundraising. But some of startups already got into Series B. So they don't really talk to me. So monthly basis sometimes,
Depends on each company, right?
It depends on the stage of the company, right? So I think as Koichi was saying, right, early on, when you're the kind of key lead investor, you need to be very involved, right? Whether that's every day, every week, whatever it takes. We're typically on the board of these companies that we invest in, but over time, as more money comes in, we move to a board observer seat, then kind of kicked out altogether. And that's not like an offense. That's just the way that these companies evolve, right? So I think it really depends, but I would say we're all pretty focused on portfolio management. That's a core part of what we do.
Do you want to add something?
Actually, pretty much the same. Depends on the companies themselves. Or definitely the more companies in our portfolio, the faster our phone run out of battery because of the WhatsApps and everything else. But of course, I think the other function is really how much does the founding team wants to engage with the investors. There are some entrepreneurs who just prefer the investors to stay out and only give them the cash and that's it. And there are also some entrepreneurs, even though they are good, they will still engage you on a frequent basis because they're open to getting more feedback and opinion. So I think not just from a VC standpoint, but it's also from the founder standpoint. Do they want to engage you? If they don't want to engage you, it's going to be difficult for us to force our way through to get them to listen to us.
Yes, and continue on with the communications with invested companies. So the companies that you invested, I think they are among the minority of the Vietnamese startups, while the majority of the startups have rejected when they come and pitch the ideas. So for the majority of Vietnamese startups, what are their problems that you see?
First point, we reject a lot of companies, not just Vietnamese. Second point, if you want to zoom into the real issues amongst Vietnamese entrepreneurs, relates back to an earlier point I mentioned. Vietnamese is fantastic when it comes to selling. When it comes to selling a vision, when it comes to selling an idea. But when it comes to the details of it, a lot of entrepreneurs, they still don't have the experience or they're just not detail-driven enough. So for us, it's difficult to make a decision to invest if we don't see enough details and we don't see how operationally it works. Because at the end of the day, we need to know how you're going to bring money to the company, how you're going to be able to satisfy the demands of your consumers, your customers, your clients. So for me, I think the main point to improve is really on being detail-oriented on the operations.
And Koichi, you must have interacted with a lot of startups, right?
Yeah, I rejected a lot too. But for me, I think a lot Vietnamese startups likes to talk. They talk about product a lot, like for 30 to 40 minutes. But I mean, for VC, actually, I want to see the vision and how do you expand, and like I want to see the business side more, not only products. So yeah. But also, a lot of team are all the engineers, and then But I mean, I think the founder, at least one of the founders, should be good at sales, right? I mean, founders all the time, they have to convince so many people, not only VC, but also future client and future employees, and so many stakeholders, right? So I haven't seen really founder who is good at the selling and deliver their vision to the VC, to us. So that's what I saw.
Shuyin, do you find any other special issues?
I think for me, I mean, in addition to what Victor and Koichi have said, I think there's an issue kind of around scaling, I would say. So I mean, like, if I look at this company, can I really see it growing kind of 10, 100x? I mean, are they, I think to the detail orientation point, I mean, are they building a system in place which will allow them to operate at kind of, are they even thinking about what it means to operate at kind of 10x, 100x the size? So I think there's kind of the systems, kind of KPI tracking, metrics kind of aspect to that. I think then there's also building a team, right? Are they building a team in place which, are they willing to invest in talent to get to this kind of point that they want to achieve?
So, so talking about scalability, so how do you validate a startup that have the ability to expand regionally, and also how do the approach, how does the approach in valuing the startups differ from the early stage compared to later stage investment?
So first of all, right, in Vietnam, right, so for now, I don't have to see, they are going to regional actually. If they can take 20 or 30% market share here, I'm fine. Because again, I invest in a much early stage, and if they can exit like 20 to 50 million US dollar, I'm fine. I can still, get a return. So, but again, if they are going to regional, back to the founder, right? I mean, founder have to hire a really good country manager who can operate, very well. So in that case, founder have to sell their vision to the future country manager, whatever. So it's all about management skill, I think.
I think on the regional point, I mean, I think the first question is like, do people even need this in other markets, and what's the competition like there, right? Because I think you see some of these copycat models being successful in Vietnam because it's a Vietnamese team. There's high barriers to entry in Vietnam, right? I think for a company expanding from Singapore or Malaysia into Vietnam, wouldn't necessarily recommend it. So as a result, there's a lot of kind of these homegrown startups solving, I guess somewhat copycat models, but they're doing it amazingly well, right? And I think that's, but I don't see that they've got a high hope of expanding regionally. And as Koichi says, sometimes that's okay, depending on the stage of where you invest. I think if you really want to see a startup that can go regional, it has to be doing something a little bit innovative, right? Not solving something, I mean, not using the same business model, but just applying it in Vietnam. And then again, it comes down to the same things that I was saying before about, how are they thinking about their kind of like back office and systems and sales process? How are they thinking about, building their team, strong country managers and so forth in a way that will enable them to scale? But I think I would also say, just because all the investors say, regional investors say, hey, we want to see these regional companies, don't go into a new market too early. Like, prove it out in your home market first and show that it works there.
I think Shuyin and Koichi probably covered most of the points really. But what I would like to maybe point out is that one of the shortcuts that I look at is really whether the founding team has experience working in a more international or regional environment, so that they actually are probably have an upper hand when it comes to dealing with people, when it comes to dealing with country managers, if you get a Vietnamese to talk to an Indonesian, for example, can they actually manage that kind of relationship? So founders with a slightly more regional or international experience, that's something that I actually would prefer to have.
Okay, thanks for your sharing. I think we run out of time and we need to move to the next panel. So thank you for the time. Appreciate it. Okay.